Assalamualaikum and hi. Today I am Muhammad Alif Haikal bin Muhammad Supardi from BIA 6A wanted to discuss about the Malaysian Financial Reporting Standard with my groupmate Ahmad Fadil bin Ahmad Rizal. First, we will be going to discuss about the introduction on MFRS 116, which the property, plant and equipment. MFRS 116 defined to be the treatment for the property, plant and equipment so that consumers of financial statements can understand information regarding an entity's investment. The recognition of assets, the calculation of their carrying amounts, and the depreciation charges and impairment losses to be recognized in relation to them are the main challenges in accounting for property, plant and equipment. But this standard does not apply to property, plant and equipment which classified as held for sale in accordance with FRS 5 non-current assets, held for sale and discontinued operations. The second one, the recognition and measurement of exploration and evaluation assets. And the third one is the biological assets. And the fourth one is mineral rights and mineral reserves such as oil, natural gas and similar non-regenerative resources. And the second one, we will be going to discuss on introduction of intangible assets. The purpose of this standard is to specify the accounting methods for intangible assets that aren't covered by another standard. The standard mandates that an entity recognize an intangible asset only if certain requirements are met. The standard also prescribes how to calculate the carrying amount of intangible assets and the disclosures that must be made about them. By the way, this standard should be applied to all intangible assets except for intangible assets that are within the scope of another standard. And the second one, financial assets as defined in FRS 139 financial statements, which is recognition and measurement. And the third one, the recognition and measurement of exploration and evaluation assets. And the fourth one, expenditure of the development and extraction of minerals, oil, natural gas. These are the examples of company that we choose, which is Media Prima Berhad and Astra Malaysia Holdings. Based on the first company that we choose, which is Media Prima Berhad complies two types of Malaysia Financial Report Standard, which is MFRS 116 Property, Plant and Equipment and MFRS 138 Intangible Assets. On this, MFRS 116 explain about the plant, property and equipment in the aspect of recognition, measurement and disclosure for Media Prima Berhad. For the MFRS 116 in recognition, property, plant and equipment are tangible assets retained for use in the production or delivery of goods or services, for rental to others or for administrative purposes, and are expected to be used throughout time. The second one is recognized principle applies to all expenditures incurred at the time of acquisition of construction of an item of property, plant and equipment, as well as costs incurred after recognition to add to, replace part of it or service it. According to Media Prima's Berhad Annual Report, broadcasting and entertainment services, computer support systems, and movable plant and equipment are among the consumer services. For the MFRS 116 in measurement, property, plant and equipment are initially valued at their purchase price. The following items are included in the cost of a piece of property, plant or equipment. And the second one, the cash price equivalent at the recognition date determines the cost of an item of property, plant and equipment. If payment is delayed beyond normal credit terms, the difference between the cash price equivalent and the total payment is recognized as interest over the credit period, unless the interest is recognized in the carrying amount of the item in accordance with FRS 123/2004's allowed alternative treatment. For the disclosure in MFRS 116 upon Media Prima's Berhad, for each class of property, plant and equipment, a company must disclose the measurement basis, the depreciation method, and the useful lives used. The second one, for each class of property, plant and equipment, should disclose the basis for measuring carrying amount, depreciation method using useful lives or depreciation rates, gross carrying amount, and accumulated depreciation and impairment losses. By this time, media primas berhad did disclose the financial statement with information about the class of property such as additions, disposal, write-off, reclassification, and depreciation. This is for the MFRS 138, which explain about the intangible assets in aspect of recognition, measurement, and disclosure for media prima berhad. Back to the first one, MFRS 138 in recognition means intangible asset should be recognized if an intangible asset is assessed as having an indefinite useful life. The standard it requires an entity to disclose the carrying amount of the asset and the reason supporting the indefinite useful life assessment. On the basis of the evidence available at the time of initial recognition, an entity employs judgment to determine the degree of certainty connected to the flow of future economic benefits related to the use of the asset, giving higher weight to the external evidence. For the MFRS 138 in measurement, the fair value of intangible assets acquired in business combinations may be reliably evaluated and recognized independently from goodwill. When there is a range of possible outcomes with differing probabilities for the estimation used to evaluate an intangible asset's fair value, that uncertainty goes into the measurement of the asset's fair value rather than demonstrating an inability to measure fair value reliably. For the second one, the proof is, according to media primas berhad financial report, only when it is likely that impairment assessment for intangible assets represented by print media, the FVLCS has been determined using the relief from royalty. Valuation using the average royalty rates benchmark against licensed publications in the similar industry. Proceed with the MFRS 138 in disclosure. The entity shall disclose the following for each class of intangible assets. Distinguishing between internally generated intangible assets and other intangible assets whether the useful lives are indefinite or finite. And if finite, the useful lives or the amortization rates used and the amortization methods used for intangible assets with finite useful lives. Based on media primas berhad financial report, the valuation techniques uses a set of cash flows that represent the probability weight average of all possible future cash flows expected to be generated from the audio CGU. Next is for the Astro Malaysia Holdings. Astro Malaysia Holdings complies two types of Malaysia financial report standard, which is property, plant and equipment, and MFRS 138 intangible assets. Same goes with the media prima berhad. MFRS 116 explain about the plant, property and equipment in respect of recognition, measurement and disclosure for Astro Malaysia Holdings. MFRS 138 recognition, future economic advantage associated with the asset will flow to the company and the cost of an item can be assessed accurately. An item of PPE should be classified as an asset. The second one, when the risks and rewards of asset ownership have been transferred to the entity, future economic advantage will be realized. Recognize freehold land buildings and satellite transponders, equipment, fixtures and fittings is recognized as recognition. MFRS 138 in measurement, measured using either a cost model or a revaluation model after initial recognition. By Astro Holding Malaysia using the cost model, which includes any accumulated depreciation and impairment losses. MFRS 138 in disclosure. Depreciation is calculated on a straight line basis to write off the cost of each asset to the residual over its estimated useful life. The entity used the amount of impairment losses that were declared on the annual report 2021 was RM 4,433,828,000, and this amount was broken down as follows. RM 51,999,000 came from buildings. RM 471,296 came from fixtures and fitting, and RM 3,910,533,000 from broadcast and transmission equipment. Same goes with the Media Prima Berhad MFRS 138 is explained about intangible assets in aspect of recognition, measurement, and disclosure for Astro Holding Berhad. MFRS 138 in recognition on Astro Malaysia Holding, the nature of intangible assets is such that in many cases there are no additions to such an asset or replacement of part of it. So, they use brands related to the 9FM terrestrial radio stations and additional theme music channels that are broadcasted on the Astro satellite television platform. The MFRS 138 in measurement, an entity shall choose either the cost model or the revaluation model is its accounting probability. If an intangible asset is accounted for using the revaluation model, all the other assets in its class shall also be accounted for using the same model. The items within a class of intangible assets are revalued simultaneously to avoid selective revaluation of assets. For the disclosure in Astro Malaysia Holding Berhad in MFRS 138, financial instruments carried on assets classified as held for sale or included in a disposal group classified as held for sale in accordance with FRS 5 and other disposals. The gross carrying amount and any accumulated amortization, which aggregated with accumulated impairment losses at the beginning and end of the period. So, the Astro Malaysia Holding presents as the changes in the carrying amount during the period.
2.3 MFRS versus MPERS. Difference between MFRS and MPERS in property, plant and equipment. For MFRS, number 1, MFRS 116 scopes out biological assets related to agriculture activities from its scope. Entities account for bearer plants in accordance with the standards. Number 2, important exchange parts or components as long as it is capitalized, all component parts are reserved. Number 3, requires an entity to capitalize eligible borrowing costs similar to the allowed alternative treatment. Entities expense of borrowing costs that are not eligible for capitalization in profit or loss in the period in which entities incur them. For AMPERS, number 1, AMPERS account for their bearer plans under MPSAS 27 Agriculture and Section 34 Specialized Activities instead of a like MFRS standard. Number 2, replacement of important parts or reactive you can activate a component as long as the old component or part is checked out. And the last one is entities expense of all borrowing costs to profit or loss. Similar to the benchmark treatment, it does not allow for entities to capitalize on any of it. This treatment adopted in AMPERS is to simplify the accounting requirements by the private entities. And difference between MFRS versus MPERS in intangible assets. For MFRS, an intangible asset shall be recognized only if it is probable that the expected future economic benefits or service potential that are attributable to the assets will flow to the entity. Number 2, goodwill shall not be recognized as an asset. And number 3, expenditure on research should be recognized as an expenses when incurred. For AMPERS, number 1 is recognized if only the cost or value of the asset can be measured reliably and the asset does not result from expenditure incurred internally on an intangible asset. Number 2, goodwill has no specific guidance in AMPERS. And the last one, expenditure incurred internally on an intangible item, including all expenditure for both research and activities, should be recognized as an expense when it is incurred unless it forms part of the cost of another asset that meets the recognition criteria in AMPERS. 2.4 Conclusion. To close up with conclusion, we can distinguish between MFRS 116 and MFRS 138, which including the specific view of recognition, measurement and disclosure in each MFRS. For MFRS 116, we know that only certain buildings are eligible to be entitled as investment property. The standard also allows companies to close either using a fair value model or cost model. Besides, changes from one model to the other model is only made if the change result in a more relevant presentation. MFRS 138 states that intangible assets should be measured initially in any cost. We also learned the differences between MFRS and MPERS, which have several of common and a lot of differences between them. MPERS specifies the cost elements that form the cost of a business combination, while MFRS prescribes similar measurement requirements on the consideration transfer. In addition, we would not have known that MFRS can be changed to MPERS, which private entities are allowed to adopt the MPERS, which is effective for annual periods beginning on or after 1 January 2016. If such entities are currently applying the MFRS framework, an early application is permitted. IAS 16 property, plant and equipment is the foundation for MFRS 116. MASB evaluated and agreed with the provisions of IAS 16 in approving MFRS 116. PPE designed as kept for sale investment properties accounted for using fair value, biological assets relating to agricultural activity, exploration and evaluation assets, mineral right and mineral reserves are all exempt from FRS 116. The standard's goal is to establish an accounting standard for property, plant, and equipment, as well as changes in such investments. The recognition of assets, the assessment of their carrying amount, and the depreciation changes and impairment losses to be reported in relation to them are the main concerns in PPE accounting policies.